And Amy will be talking with us today about some GTL products. Her title, I believe, is Regional Sales Manager. And she lives in Kansas City. I understand that she is a great Denver Bronco fan. Is that correct, Amy? It must be. I saw that smile.
I don't think our connection's very good. I better try to rejoin.
Actually, she's a big Chiefs fan, and they've had a great year, haven't they, Amy?
No, we didn't.
Anyway, we welcome her here. She likes to do a lot of outdoor activities. She's been with GTL 5 years, in the insurance industry about 20 years. And some of the things she'll be talking about today, one of the highlights is in 2026, long-term care product was approved in October of 25 for the state of Utah. She'll also be talking to us about Advantage Plus programs. And Amy, I hope that at some point that you give us your contact information.
Sure.
So that the agents won't call me, they'll call you.
I'd be happy to.
Anyway.
And I'm actually going to go in depth on the limited long-term care, and Nancy, you and I can reschedule for the Advantage Plus Elite, because I think since it's new, we should probably get very specifics.
Great. Well, without any further ado, take it away, Amy.
Okay, let me see the new platform, share my screen. So yes, the limited long-term care, it's a different name from the product that we have approved in other states, but we don't really care about names necessarily. We want this product approved, which it was last quarter in Utah. So we're really going to dig into the product. But first, I know a lot of you know and have written GTL, and we appreciate your business. But if there's anybody new out there that is not familiar with GTL, we are located in Glenview, Illinois, 20 minutes outside of Chicago. We are family owned. We were founded in 1936. We're a mutual company. We're licensed in 49 states, and we have a great rating. So we are rated excellent, rated A by AM Best. We have lots of products available. We always try to bring you the best in class. This is the newest limited long-term care insurance in Utah. So that is the one we're going to be talking about today. As far as cross-selling tools, lots of times agents will be like, yeah, it's a great product, but how do I, talk about it? We have great tools. We have a full brochure. We have a big brochure that you can walk through with your client. We have an infographic that you can see on the left-hand side of the screen that kind of just shows the agent so they can hear it from you, or the clients, they can hear it from you and see it. When you get appointed with GTL, you will receive a welcome email. I don't know if everyone's appointed, but if there's any new people that will be appointed, once you get that welcome email, they'll ask that you wait 24 hours, and then you can sign on to the portal. When you are signing on to the portal, please also download the GTL e-app. You can see it up there on the right-hand corner. You can use the same password. It's the same password and username as the portal, so you don't have to remember two different ones. And from the e-app, you can take the application, you can quote it, you can sign your device straight from there. We also have another way to take the application. If you are not meeting in person, that's not an issue. We have a voice verification call, but what we came out with that is more used than the V call is the one-time PIN. So the one-time PIN, I will go through this later, but it is very simple. When you are in the application, it asks how your client wants to sign it. If they are not in person with you, to sign the screen, you click on one-time PIN, you put in the client's cell phone number, they receive a text, they read you the PIN, and you enter it into the application, and that's their signature. So the main thing is it has to go to a client's phone number. It can't go to yours. I can, if you don't have a touch screen and you are in person, you just send it to their phone and they can read it to you right there. But we really try to make it very simple. If you are not on the e-app and you go to the agent portal, then you can take the application through the PIN or the V-call. So let's talk about the product. If you have clients that are currently taking prescription drugs, maybe they haven't planned for the future, they can't afford long-term care, because remember, this is the limited long-term care policy. Maybe you're talking to clients whose parents are getting ready to depend on them for care. This may be a great product to have them talk to their parents about for future care. The main thing with this product is that they cannot need the care, the benefits of the policy. They do not have difficulties with ADLs, or they don't already have a cognitive impairment. So the takeaway is, if they need the product now, they most likely won't qualify for it. So if they are not needing it now, it's a great time for them to talk to you about it. So with this product, there are 3 separate plans to choose from. Issue ages 55 to 85. Each of the plans cover the exact same thing. The difference with the plans is the cost and how much is paid to the client. So we're going to break down the 3 parts of the policy, and then we'll talk about the individual plan A, plan B, plan C. So with the limited long-term care, the maximum benefit period is 360 days. This is not based on a calendar year. If the client uses the benefits and then 180 days go by and they are certified by a licensed practitioner that they no longer need the benefits, they no longer, require the home health care or the nursing home, after 180 days, then it will restore back to another 360 days benefit period. Now, the takeaway on this is it won't always happen. So if someone has Alzheimer's, and they need the benefits, they'll never recover from that. So that particular client will have 360 days of use. In other situations, people recover, they won't need the health care, home health care, or the aid, and then they would receive another 360 days. So part one of this product is home care, whether it's skilled nursing, PT, OT, home health aid. So if a client needs a home health aid or physical therapy, then they receive that benefit. That's the first part of the policy. Now, people always ask who can provide the skilled, which is your nursing, PT, or the home health aid, and they must be a registered and certified by the state to perform the services, and they need to work for an agency that's licensed that can provide a bill of service for each visit. So when we're looking at the skilled and aid health, home health, then those are the 2 requirements for people to come in to the house, because clients want to recover in their home and provide these services. Now, part 2 is T-Care. This is the family caregiver benefit. So sometimes people prefer family members to take care of them. So part 2 of this product is T-Care. And when you think about family caregiving and stuff like that, a lot of times it's pushed on to people. They don't have any other choice. So if you look at the kind of the specifics, average private nursing home, $108,000 a year. 40 million people reported themselves as family caregivers in the past 5 years. Of that 40 million, 40% of those people suffered from depression, and it may be depression. It could be stress. Someone's taking care of themselves, their spouse, their children, they're working full time, and they have maybe a parent that now they've become a caregiver for. And 85% of that 40 million do not receive any respite care. Like, they don't get the time off. They can't take care of themselves, so forth and so on. It's overwhelming many times when people become family caregivers. So what T-Care does, what the second part of this product does, is that when the client has an approved home health care claim by GTL, their family caregiver goes through T-Care's assessment tool, and it does not take very long. Once that happens, we will send the client a lump sum of $3,500 that they can then in turn give to their family caregiver. So this could be for gas, car repairs, time off work, whatever it may be, but financially to help that family caregiver. On the other side of the benefit is the targeted support services that T-Care gives the family caregiver. So it's very simple. When the client determines that they need home health care, or they can't do 2 of the 6 ADLs, or they have a cognitive impairment, and they would prefer to do a family caregiver, the family caregiver registers with T-Care, and they complete an assessment. And that assessment, just asks a bunch of personal questions, about, who they're taking care of. They identify caregivers' needs, and they come up with a plan with benefits for that caregiver. Once that is completed, they reach out to GTL and they say, hey, we have a caregiver. We send the money to the client. Then they continue to give that caregiver referrals and local resources. So for example, if the client needs to have meals delivered and the caregiver is trying to set this up, meal delivery is called different things in different areas. Like, you might have Meals on Wheels. In Kansas City, it's called the Good Shepherd. But T-Care will help with those local resources. Or maybe the client needs to go somewhere and they are not, and the caregiver can't get off work. So they help them find the resources to maybe, find transportation. So they have easy to access tools for the caregiver and reminders. And the nice thing is there is a 3-month follow-up. So T-Care follows up with that caregiver 3 months after they have put their plan in place. How are things going? Has things changed? Do you need different type of support? So part 2 of this product is really focused on the caregiver for the family of the client. Now, for both part 1 and part 2, in order for them to qualify for those benefits, they would either have to not be able to perform 2 of the 6 ADLs, or suffer a cognitive impairment and require supervision. So for part 1 or part 2 to kick in, those are the qualifications the client would need to have. Something we need to always speak about is the 6-month pre-existing condition. So this is both for the home health care, PT, OT, and the health aid, whether it's someone from an agency or a family caregiver. So essentially it says, if there was a pre-existing condition that was disclosed or not disclosed on the application, for which medical advice or treatment was recommended or was received from a doctor 6 months prior to the effective date, any loss due to that specific pre-existing condition would not be covered for the first 6 months of the policy. For example, if an applicant was diagnosed with cancer or receiving treatment for cancer 6 months prior to the effective date and they can answer no to the health questions, they still can get this policy. If they need home health care or an aid due to the cancer benefit or cancer diagnosis, that would not be covered for the first 6 months. Once month 7 comes into play, then the cancer is covered. However, if the client fell and broke a hip or something within the first 6 months, that has nothing to do with the cancer diagnosis. They would need help at home because they've broken their hip, they can't do 2 of the 6 ADLs, then that benefit would be available immediately to the client. Now let's talk about part 3. So part 1 and 2, home health aid, T-care, those have a 6-month pre-X. Those need 2 of the 6 ADLs or a cognitive impairment to kick in. Part 3 is not subject to the pre-existing condition limitation, and it can start day 1, and that is the prescription drug benefit. So back to one of my statements in the beginning, agents are, how do we talk to our clients? How do we bring this up? Well, as you are doing reviews with your client for whatever product it is, and they are on prescription drugs, I don't know of very many policies that pay their clients to be on prescription drugs. So this is a great way to introduce this policy. You already are taking the prescription drugs. You're not getting money for them. You're healthy. You can qualify for this. And then down the road, if you need it, you already have it in place. So the prescription drug benefit pays the client $25 per brand name prescription and $10 per generic. Now, this payment is based on fills. So if a client has a 30-day fill or a 10-day fill or a 90-day fill, whether it's a brand name, they get $25, or if it's a generic, they would get $10. We don't care about the prescription copay. They could have a 0 copay. We don't need the receipts. We just need the information that was filled. So it's regardless of a copay they may have in place, it's based on fills, and it's $25 for brand name and $10 for generic. And again, the prescription drug benefit is not subject to the pre-existing condition of 6 months. That is the outline of the plan. Now let's look at the individual plans. So they differentiate themselves in the amount of the benefit and the price the client pays for the plan. So plan A is going to be our least expensive. Plan B is your middle of the road. Plan C is going to be the most expensive. With saying that, Plan C is also going to give the client the most benefit. There is a daily maximum. So if we focus on Plan A, and you can see that it will pay a client $75 for a PT visit, $75 for an OT visit, occupational therapy and physical therapy. So if they do both of those visits in the same day, they would receive $150. They have reached the daily maximum for Plan A. If they also need a skilled nursing care to come in and a speech pathologist, they would want to do that on a different day because that would put them over, if they do all 4, that would put them over the daily maximum because we only pay $150 a day for Plan A. And then you can see Plan B is $150 for the speech pathologist with a $300 maximum daily benefit. And Plan C is a $200 benefit for a speech pathologist with a $450 daily maximum. When you look at the prescription drug benefit, Plan A will pay up to $300 a year. Plan B will pay up to $600 a year, and Plan C will pay up to $900 a year. So agents sometimes ask, how do I design this? You can look at their prescription drugs that they take based on their fills, whether it's generic or brand name. You can calculate it. If they take something that adds up to $400, you put them on Plan B. And then if they end up taking more prescriptions, they can go up to $600 per year. So here's an example of a 65-year-old who has Plan A. They take 4 brand name prescriptions and they fill 20 generic prescriptions over a 12-month period. So brand name pays $25, that's $100 for that year. Generic pays $10, so $200. So the total benefit paid for this example, they maxed it out, they will receive $300. The cost of the policy, the annual premium, is $365.68 for a 65-year-old Plan A. So the net annualized cost after they receive their prescription benefit is $65.68 or $5.47 a month. We talked about the pre-X. If they can answer no to the health questions, then they can get the policy. It's just if they have something that was advised, treated, recommended 6 months before, that's not covered 6 months after. But look how easy the underwriting is. There's no MIB check. We don't ask for medical records. We don't do a prescription check. So the first question is, are they currently living in a nursing home or assisted living facility or receiving home health care or similar type of care? Remember I said if they need the benefits of the policy, they probably won't qualify. Question 2 says, do they require assistance or supervision with ADLs? Question 3 says, in the past 12 months, have they been diagnosed with Alzheimer's, dementia, or memory loss? Number 4, is the proposed insured currently eligible for Medicaid on early Medicare due to disability or disabled? Question 5, is any proposed insured currently receiving SSI, disability benefits, workman comp, and other disability payments? If they can answer no to those questions, then they qualify for Plan A and Plan B. If they would like to buy Plan C, then we just asked about the next 60 calendar days. Are they anticipating scheduling admission to a hospital, nursing home, or assisted living facility, any home health care services, or surgery? So if they can answer no to all 6 questions, then the client qualifies for Plan C. So these are the rates, and I don't want you to calculate them through here. I'm just showing you this slide just so that you're aware of. The main thing to take away with this slide is that the premiums are age banded. So at age 55, option B is $25.10. When they go into 55 to 60 age range, it's going to go up to 28. When they age into the 61 through 64, it's going to go up to 38. So the client needs to be aware that the premiums are age banded and it will increase slightly each time they move into a new age band. The reason why I don't want you to calculate it from here is because there is also a small monthly charge for Part 2, the caregiver, T-Care, and that one doesn't increase. So I will show you the easiest way to quote this. As far as payment types go, we will take monthly drafts, quarterly, semi-annually, and annual bank drafts. If the client wants to do a direct bill, we will do that quarterly, semi-annually, and annually. Then you would need to use a paper application and collect premium at the time of application. Lots of agents ask, do we take credit cards? And we do not. So that's the base policy. The base policy, you have 3 plans to choose from, but each plan, they all cover the same thing. Again, the difference is the cost of the plan and the amount of money that the client is going to receive from that plan. We do have riders that can be added on. We have the accident and sickness hospitalization benefit rider. Essentially, this is kind of like a hospital indemnity rider. They can receive between $100 up to $450 a day. Should they can be confined to a hospital due to an accident or sickness, the client with this rider can choose a 3, 6, or 10-day benefit period. It will restore every 60 days of no hospital confinement, so the rider restores. And the full benefit or payments, so if they stay 24 hours, then the first day of that benefit period will pay out. Now, for issue ages 75 and above, they have a choice of 100 to 300 for either a 3-day or a 6-day benefit period. Takeaways on this: number 1, if they are hospitalized and they leave the hospital after 60 days, their full benefit restores. It's unlimited in benefit restorations. There is a 30-day waiting period for sickness on this rider to start. So if the client would, like gave example with the pre-X, if they would fall and break a hip, that is an accident. For sickness, there is a 30-day waiting period. This rider also has the same pre-X, pre-existing condition, that the base policy has. Other riders, we have the ambulance rider. So this rider, $200 for an ambulance. It's payable 4 times a calendar year with a lifetime maximum of $2,500. They don't actually have to be admitted to the hospital. If they feel that like they need to go to the emergency room or they need to go in with an ambulance, it will still pay out even if they are not admitted. There's the critical accident rider. So after emergency room visit, it will pay a lump sum for the injuries listed to the right. So they can choose a $5,000 critical accident plan or a $10,000 critical accident plan. And you can see it breaks it out very specifically what will be paid out due to what type of event happened. We also have the return of premium rider. Now, I caution on this one only because it is the return of premium minus any benefits that have been paid out to the client already. Those benefits do include the prescription claim benefits. So if a client, is getting $600 a year, $900 a year, those yearly payments will be subtracted from the premium that is paid out back to the client with this rider. So let's talk about claims. As always, we need to manage clients' claims expectation. GTL has no desire to deny or delay any claims payments. We welcome policyholders to call, and in our claims form, we have a HIPAA form. That allows us to be very transparent and work with the agents and go to work for the client. We take an average of 8 business days. So once all the forms that we need are in, we pay our claims on an average of 8 business days. We also have a third party that we contract with, and we pay for them, but they will reach out and get medical records. If the client is struggling to get those from the doctor's office, and they will call every 3 days. And that's really where that HIPAA form comes into play also. Now, people ask about filing claims. What we need for the prescription drug benefit, it is very, very simple. Have the client go to the pharmacy. Say, can you print me out my last 12 months? They want to be reimbursed on an annual basis. The last 6 months, they want semi-annually. They could go monthly if they want. But all they need to do is go to the pharmacy and say, I need a printout of all my prescriptions that I have filled in X period of time. They write the policy number on top of the printout and they send it in to GTL claims. We calculate brand name versus generic name, and then we will send the client a check. It's really that simple. If the client needs to do a home health care or home health aid benefit, there are claim forms on the website. They will need to complete that. They will need to include the plan of care from the licensed physician and include the proof of service. So a new claim form doesn't need to be submitted for subsequent services. So if they needed someone to come in to do physical therapy and speech therapy, and they want to file that on a weekly basis, after the initial claim form, they do not have to fill out a new claim form. They just need to include the proof of service. We suggest filling these out monthly, but a client can do it as frequently as they would like. And then for the rider benefits, so the ambulance, the hospital indemnity, the accident, complete the claim form as the event happens, and then just include proof of service. So I'm not quite done because I want to go through showing you how to quote it, because I told you I'd show you how to quote it in an easy way. However, if you need to reach out, sales support, they can help answer any questions. Their toll-free number, which you can call or chat to text to chat, is 800-323-6907. You can email them at agency@gtlic.com. And then we also have a new chat bot. And that chat bot, we are making it more robust each and every time. So you can if it's after hours, like today, the office closes at noon. If you have a question this afternoon, try the chat bot, please. You can type in the policy number, show a question, claim. It's very robust. Now, my information, my email is abock@gtlic.com. I want to make sure everybody has that. And then my phone number, go ahead and get that for you guys. This is so bad, but I need to look at my email. It's 847 904-5589. So let me do this. Let me minimize this. Pull this back up. Was there any questions before I move on to how to quote and how to submit?
Amy, I have a question.
Yes.
If they are a Utah resident and we get this, and then down the road they are living abroad and something happens, will this still pay out, or do they have to have the services in the United States and or in their area?
It's not their area. It is the United States, but they can move from Utah to Missouri. Why you would want to do that, I don't know, but they could move to any state. Once it's in place, they can move to a state where it's not approved to be sold, but they can use it anywhere in the United States.
Lori, you have a question? Lori? Are you still muted, Lori? Do you see anything from Lori in the chat box, Nancy?
No, I don't. She was trying to ask a question maybe, huh? Oh, I don't see.
Lori, it shows you still have your hand up. Feel free to unmute and ask away. I don't know that we can do that from our end, can we, Nancy? No, it says I
No.
can't unmute somebody
Yeah.
else.
Right. And it looks like she's off mute.
Here we go. Looks like Alexis has a question. Did I understand correctly? Oops, it lost the question there.
Sure, how to help you with that.
Here we go. Did I understand that correctly, that if you move to a state where this product is not sold, they can still receive the benefits?
Yes, because it was sold in a state that was approved. And then
Okay.
once they purchase the policy, that is a contract between GTL and the client. So they can utilize it elsewhere.
And Tim Croto is asking the question, Amy, can you put up your email and phone number again, please?
Yes. How do I put it up?
Amy, why don't you just quote it to me and I'll type it in the chat.
Oh, I can put it in the chat.
Oh, okay. Yes. If you
So my
wanna do that.
email is abock@gtlic.com. Phone number is 847. So bad I should know this. 904-5589.
Okay, Amy, here's, Lori said it wouldn't let her unmute. So she said she's heard a lot of great info on short-term care. I thought we were going to talk about a newly approved limited long-term care available now in Utah.
So that is that product. What I just talked about, limited long-term care. The name was changed for Utah. So everything, this product is limited long-term care. If you're in Utah, and I'll show you, you'll go to, if you go to order supplies, you would go to limited long-term care. So that's the name of the product. In the other states, it is short-term home health care. So let me close this. Everybody see this screen.
Yes.
Okay. So I just went to GTLIC.com. Couple of things. The nice thing with this is you don't have to sign on. If you're going to do a claim, it's right up here at the top. Click on claims, and then it's going to tell you to select a claim form. Boom. Right there. Very simple. But what we're going to do is we are going to do an agent log on. Log on. And here we are at the first page. So quote and submit. This is going to be the easiest way to quote and submit the policy. I showed you how you can see the bands, you can talk to your clients and say, hey, as you age into this age band, it's going to go up. But instead of you trying to do a lot of math with the T-care that stays the same and the age banding on the other part of the policy, this is the easiest way to do it. So we are going to just say Amy Bock, female, born in 1850. My issue state is Utah. And then I go next. So I'm a 75-year-old female in Utah. Here is where I'm going to be charged. Do I want monthly, quarterly, semi-annually, or annually? We're going to stick with monthly. We're going to select the product. Now, that's interesting. It says short-term home health care. That is the product we're talking about, but in Utah, the name of it, and we'll have to have someone fix the website, is limited long-term care. So we click on that. I need to hide this and hit continue. All right. Once again, Amy Bock, female, Utah, 75. Scroll down here. And it says limited long-term care benefits. What option do we want? A, B, or C? So let's pick B. We can go down and we can choose the ambulance rider, which you can see is $4.83. I think there might be something wrong with the website because it's saying my premium is $6.50 and it's not taking into effect. There we go. Maybe it is now. Okay. So I picked option B. Option B is $109.85 a month for a 75-year-old. I added the ambulance rider for less than $5 a month. And then you can see there is a policy fee fully disclosed of $1.67 a month. If you're like, okay, let's see what option A is. Option A for a 75-year-old is $60.99. There's the rider. Policy fee is not going to change. So I'm going to go back up and change it to option B. And at this point, I know with option B, I'm going to get $600 for prescription benefit. I'm going to get the middle, not the most benefit or the least benefit for the plans, because I'm doing plan B, which is right in the middle. So now if I want to apply, clients like, that's good, I like it, we can hit apply right here.
Amy, we have a quick question here. Can we still use an iPad to enroll in these products?
Oh, absolutely. Absolutely. So I'm on the agent portal, assuming that either A, I don't have a touch screen, or B, maybe I'm not in front of the client. But you could absolutely use an iPad. I'm just doing it from my computer. So I'm on the GTLIC.com. There is the same links on the e-app that you would use on your iPad for here. So where do we want to deliver the documents? Let's deliver it to the insured. We'll go with the applicant information. Park City. What's a zip code it? Or not Park City. Sorry, you got me thinking of skiing.
Yeah. If you put Salt Lake, you can
I'll
do
do Salt Lake.
84111. Yeah. And
I'm
then
sorry.
just do, oh, sorry.
Go ahead.
And then 84111.
That's an easy one to remember. So here we ask for the applicant's email address. Please know, we are not going to send them a bunch of spam, a bunch of marketing stuff. We're not going to try to send them information about other products. We will deliver the documents to the email address, which will also include leave behind all the disclosures that you would need to leave with the client. So we'll just say, well, we're not going to use that person. Sorry, we're going to use mine. If they don't have it or they don't want to provide it, you can always click right here. Now, we do ask for a beneficiary. The reason why is because if the client has been receiving these benefits and they pass away before a claim form can be filled out and sent in, we still want to give the beneficiary the monetary benefits that was due the client. So we're going to save and continue. So here's our questions. First one is the waiver of option inflation program. This is a rider. If we don't want it, which just is going to increase the benefit through the inflation protection, I believe it's 3% annually. We'll just go ahead and say, no, I don't want it because I didn't quote it. Now, is the applicant, here are questions that we saw on the application. We're going to say no. I'm not living in a nursing home. No, I don't need help with ADLs. No, I have not been diagnosed with dementia. No, I am not disabled or on disability due prior to age 65. No, I don't have disability payments. Do you have another limited long-term care policy or certificate in force? No. Do you have another long-term care policy during the last 12 months? No. Are you covered by Medicaid? No. And do you intend to replace? No. Save and continue. Here are the authorizations. Do you agree to it? Oh, this is different. This must be a Utah thing. I apologize. I designate the following person to be notified of the lapse of my policy. No, we're not going to do that. Applicant. Do you agree to receive the policy and everything else from communications electronically? Yes. Agent's report. This says, please list all the policies or certificates that you have sold, which are none. This is about replacing, is not likely to replace. And now I get to sign it. Here, if you do a commission split, we are not. And I'm going to save and continue. Pre-authorization for premium. It's a checking.
Amy, do you mind if I ask this question? Alexius Gallegos has.
I'm sorry?
Do you mind? There's a question here. Do you mind if I ask?
Oh, yeah, please, please.
Okay. Does the premium change if they have a pre-existing condition, even though there is a 6-month waiting period?
So the premium changes based on age banding. So it changes as they age into the new band. So if they were 60, say they were 61 when they bought it, they would have the same premium until they were 65. And then they would age into a new premium. So it's age banded premium, not based on the 6 months. So we'll go ahead and draft today. Actually, let's draft on the 15th. Okay. The insured's name, payer. So the payer can be different. If it's a child's paying for their parents, it can be different. But you still have to put the insured's name. Save and continue. So now we get to review it. Here's my personal information. Make sure I have everything correct. Here's my policy right here. It costs $109. We added the ambulance rider. There's my fee. It's $116.35. We're going to save and continue. Now we get to the disclosure. What is the premium that the agent has quoted you? $116.35. The answer to the question, describe my financial situation. I choose not to complete this. This is definitely a Utah state specific. And then I agree that the company has included me with the premium history, all that information. So we applied insured signature and today's date. Name of the agent. My agent has advised me that this seems, this is my agent has advised me at this limited long-term care insurance policy does not seem to be suitable. However, I still want the company. We're not going to check mark that. We're going to save and continue. So here is where we have three options for the signature. We can do a digital signature. We can do the verification call, or we can do the one-time pen. I'm going to click the one-time pen. Would someone like to give me their number?
801 390 8655.
Okay. Go ahead and let me know when you get a text.
Amy, while he's waiting for that, Alexia, apparently that question wasn't quite the answer that he needed. So I'll ask it again. It's the one in the chat. Does the premium change if they have a pre-existing condition, even though there is a 6-month waiting period?
No, the pre-X has nothing to do with the premium. So the premium set, if they qualify for the policy and they're approved, there is a 6-month waiting period for any pre-existing conditions.
Amy, here's that pin. 24235.
5. Confirm. There we go. You just signed my application.
Amy,
All
here's
right.
another question from Alexia. He's saying, what was the last part about non-suitability?
Oh, so that was let's see if it'll let me go back. So right here, it was part of the disclosure form. So if the client, like if you talk to a client and then uncovered that you don't feel that it was suitable for them and you said, I don't think that this is a good policy for you, let's look at some other stuff, and the client says, no, I really want this, regardless of what you think, then the client would click on, my agent has advised me that this is not suitable, but I still want it, essentially. I left it unchecked because this is suitable. Oh, we have to do the one-time pin again. because I went back. I'm going to send the code one more time.
You ready for that new number?
Yep.
65712.
Okay. See how fast that was? And we have signed the application. So we're going to save and continue. E-delivery disclosure. This is just to deliver the documents. Save and continue. Consent to electronic transactions. I accept. And then at this point, we would just submit the policy, which I am not going to do. But that's how easy it is. Now, there are some additional questions like the suitability or non-suitability that is specific to Utah. So I would suggest everybody go through just like we did just now on their own, and you can go all the way until you get to submit, and you don't have to submit it. But that way, now that you know how the product works, you know that there's 3 parts to it. 2 of them have a pre-X, 6-month pre-X, 1 does not. You know, the difference in the plans are either, you know, A, B, and C, which is lowest premium, lowest payout, medium premium, medium payout, highest premium, highest payout. They all cover the same thing. Also on the trifold brochure, there is a rate breakout, the premiums with the age banding. So if you want to order one of those, just kind of keep it in your pocket to let them know what the age bands are when they will go age into that higher premium. I've spoken to a lot of agents who sell this, and I'm like, do you find is that difficult? And they say no. You know, health insurance increases every year. A lot of stuff increases every year. We just tell them it's going to increase every 5. So, but yes, you can go in and go through the exact same thing I did, quote it, play with it, go all the way through, and just, you get right here and you just don't have to hit submit. So I do want to go back to one other spot, if I may. I'm going to go home. I'm going to go to access GTL link. Download order forms. We're going to go to Utah. We're going to select the product. Looks like we do need to update this website. So we, for now, I'm going to pick home health care, new with T-Care. Then we're going to check all just because I think it's easiest. And we're going to hit search. So you can see here that when it does come up with Utah's brochure, it does say limited long-term care. Here's the large brochure. Here's rates, outline of coverage, all that information. Here's the application right here if they wanted to pay, they wanted direct billing. But if you wanted to order, you could order 25. Make sure you hit update cart. It says 25 in your cart. You view the cart and go ahead and continue. But that's how you order supplies.
Okay, Amy, Alexius also asked, can we see an example where the client answered yes to a medical condition?
That would be a decline. But sure.
Oh,
That's a decline. They have to answer no to all of the.
Yeah. Are you guys so damn dumb? Huh?
No, I'm just saying and just letting you know exactly what will happen, but I'll show you what happens. Give me 1 second. So here it says, so are they currently living in a nursing facility? Yes. And then we'll say no to the other two. We'll say yes to this one, no to the rest of them, no, and then save and continue. And it says, do not submit this application since you answered yes to question 1. Do not submit this application since you answered yes to question 4. So in order to qualify everything, it's a yes, no application. Everything has to be no.
I
Alex,
think
you're
we're
not a
good.
pain. I'm glad you asked. Maybe it's me and I'm not explaining it correctly.
That's it. That's it. You did a terrible job. Nobody understands, Amy. Anyway, thank you, Amy. We appreciate you spending the time with us today. We appreciate
Absolutely.
we appreciate everyone who has attended.